up, everybody? It is Mark with the My Front Range Living team, and we are back in our series of mortgage questions with this guy right here. His name is Troy Reichert. He's with the Reichert Mortgage team.
Hey, Mark.
Thanks again, buddy. We appreciate you coming on. And today we are talking about buydowns. Now, buydowns are a big thing, especially in our industry. I know that a lot of agents are out there right now. They're marketing certain properties with 2-1 buydowns, and that's fine. That's well. The struggle is, what the heck are they? So a couple questions, Troy. You and I were chatting a little bit earlier. Permanent, temporary, 2-1 buy down. This is like a foreign language to me, buddy. Shed some light.
Yeah, so this market has really brought these particular products back into the light. So what's going on here is because interest rates are higher than they were than the last couple of years, what we decided to do in the mortgage world was to go ahead and allow for these opportunities for temporary buydowns. Permanent buydowns have always been there, right?
Oh, okay.
But temporary buydowns just came back to the forefront. So what are the differences, right?
Yeah.
So let's talk about temporary buydowns first, because those are really, really important.
That's what's being marketed right now?
Correct,
okay.
Absolutely. So temporary buydowns, a 2-1 means for 2 years you will have a lower interest rate, but that interest rate changes every year until you get to your normal market rate that you locked in, okay?
Gotcha.
So a 2-1 buy down, the first year, you're going to be 2 percentage points lower than what you would normally get in the market. So let's say right now, interest rates, I'm just going to throw a number out there. This is not necessarily the interest rate for you.
Subject to change.
Yes, absolutely. So let's say you can have an interest rate now of 6.25% on a conventional loan, okay? The first year, you would have an interest rate of 4.25%. Okay, and then on your anniversary next year, you're going to have 5.25%, and then it's going to adjust again on the second year anniversary to 6.25%, and it's going to stay there for the life of the loan. Okay. So what that does, now you still have to qualify at that 6.25% in this scenario, right? So you can't mess around with that, but it allows you to temporarily have that lower mortgage payment, so you feel more comfortable about that. Now, where does that help? Right? So you know maybe you're going to get a promotion, right? And you know that you can absorb a higher interest rate later on down the road. That's already in the works, right? So maybe that makes you feel more comfortable. Maybe you're anticipating a refinance because interest rates are coming down, right? Entirely possible, by the way, but no promises there, right? So what that does is it gives you that 2-year cushion to allow some things to change within your lifestyle to be able to absorb a higher mortgage payment later on, or go ahead and refinance into that lower rate if it's possible to do so.
So you said a couple things there, Troy. So the question is, assuming rates go down, that whole marry the house, date the rate thing, but 4.25%, 5.25%, regardless of what rates are in that third year, you're going to hit that 6.25% because that's the paperwork that you signed at closing. It's not based on, it's not a variable, right?
It is not a variable rate. You're going to be, if you never refinance out of that, you never sell that home, eventually at that 2-year anniversary, you're going to be at 6.25% for the life of the loan.
Okay. Yep. So, if it does go below 6.25%, it might make sense to refi. But again, to your point, no guarantee.
Yeah. You have to feel comfortable with, in 2 years, being able to absorb that mortgage payment at 6.25% in that scenario.
Yep. Gotcha. All right. So tell me about permanent. What's permanent look like?
Sure. Permanent is, as the name says, it's a permanent lowering of your interest rate based upon the market rate. So let's say you're, again, 6.25% scenario, right? And you want to dedicate money to permanently buy down that interest rate, okay?
Gotcha.
So that money can come from a lot of different sources. It can come from the seller. It can come from you. It can come from a gift from a relative or a family or employer, those types of things. So what that's going to do is it's going to permanently reduce your rate. Now, I can't get into the specific numbers because how much it costs to buy down, a point or something like that is going to be different based upon the home purchase, your credit, those kind of things. So long story short is it's going to usually take years to recoup your costs on a permanent buy down. So you have to make sure that you're going to be in that home long enough to make sure that makes sense for you. Now, I will say this, as we talked about with temporary buy downs, you have to qualify at the market rate, right? Permanent buy down, you'd be able to qualify at that lower rate. So let's say you didn't qualify at 6.25%, but you would qualify at 5.75%, and you want to dedicate money to get to that lower interest rate. It'll allow you to move forward on purchasing a home. You would qualify at the 5.75% instead of a 6.25%.
That's huge.
So there's some plus and minuses to both options.
So when we talk about the temporary, right? So permanent is going to have, there's going to be a substantial cost.
Yep.
But sellers, like we were talking about, like crazy, sellers are offering this 2-1 buy down, the cost has to be less than it is on the permanent.
Absolutely, it's lower. So now, temporary buy downs, the money has to come from the seller or an interested party, such as a realtor. Okay, it
So a
cannot come
realtor
from
could
you.
offer part of their commission as that buy down.
Absolutely,
Hey, buyers, sellers, are you listening to this? Our commission is always negotiable. This is a great way to do it. Take advantage of it. Sorry.
it's a great way to do that for sure. So basically, what it costs right now, let's say on average, $450,000 home. I'm just going to throw
Sure.
that out there.
Sure.
To do a 2-1 buy down, you're looking at somewhere between $10,000 to $12,000 for that temporary buy down. So I'm seeing, and you can probably corroborate this, I'm seeing where there's some opportunity there for sellers,
For sure.
realtors to combine their cash to help out and get that 10 to 12,000.
Right, that's huge. So that $10,000 to $12,000 over the course of 2 years, do you think that the buyers would get that back, or is there another way they can use that $10,000 to $12,000 in negotiations?
This is the beautiful thing about a temporary buy down. So let's say they get the temporary buy down, they move into the home, and rates go down, right?
Okay.
Whatever amount they haven't used, they get in a principal reduction that lowers their loan amount on a refinance. They don't lose any of that $10,000 to $12,000, even if they
Wow.
refinance.
Okay, so that's pretty beneficial.
There's no downside to a temporary buy down, in my opinion.
There it is, right there. There's no downside. You can't do it. So what's the break even point typically on a buy down?
Sure. So we talked about temporary buy downs, right? There's no downside to it. There's no
Right.
break even point because you get your money regardless, right? So on a permanent buy down, again, situations vary. Yours might be a little bit different out there, okay? But I would say on average, you're looking at a 6 to 8 year recoup time on a permanent buy down.
So again, that permanent buy down, a buyer really needs to take a look at how long they're planning on being in this home. Otherwise, it just may not make sense.
It may not make sense. What I'm seeing right now, the majority of times where it makes sense is when they need to qualify for the home.
Okay, gotcha. Makes perfect sense. Man, Troy, that's awesome, brother. I appreciate it.
Thank you.
Hey, as always, everybody, we hope that you found value in today's content. If you want to hit the description of the video down there, we do have Troy's contact information. If you want to check out last week's mortgage question video, you can find that right here. And in the description down there, you are also going to find our relocation guide. So if you're thinking about coming to Colorado Springs or moving to Colorado Springs, buying a house in Colorado Springs, that is some great information for you. Just some different areas in town that may help you find or better suit your criteria. Hey, as always, it would mean the world if you went down there and you clicked on that thumbs up and gave us a like on today's content. Troy has worked his tail off, so it would mean a lot to him too.
Appreciate it.
And you could go down below, hit that bell, and subscribe to the channel. We're putting out content every single week to help you make Colorado Springs feel like home. As always, thanks so much for stopping by. We appreciate it. We look forward to seeing you soon. Have a great day.
Bye.